Today we'll discuss measurement, valuation and disclosure, that is keeping in view the long-term items. When we say long-term items, these are those non-current assets which useful life is more than 1 year. We'll discuss property, plant and equipment, that is the long-term asset, non-current asset, capital asset, or another name is fixed asset. Any name we can use. These are assets which are subject to depreciation because they will lose its worth or value over the passage of time. So we have to depreciate over the period of useful life. Impairment and disposal of long-lived asset. We are doing asset adjustments by depreciation every year, but maybe some year there is a drastic change in the market values and the depreciation, like the written down value or carrying value, is not giving the right figure. So we have to do some extra treatment of decreasing in value by using impairment. Impairment is drastic damage in the value of the assets. So that is again related to non-currents. And disposal, how when we dispose, we pull out the cost of asset, whatever accumulated depreciation, and we compare it with the cash that we receive. The resultant is going to give us the profit and loss on the sale of asset. Then intangible assets, physical asset which we can touch are called tangible assets, and those assets which we cannot touch but they are really worth and they have importance and they have value, these are called intangible assets. The best example is a patent, copyrights, goodwill, which has worth, but of course this cannot be physically touched. That kind of asset has to be amortized over the period of time. That same decrease in the value of non-current assets. We'll see the leasing treatments, income tax treatment, accounting for bonds and non-current notes payable, and accounting for pensions. This is what is the discussion of the day. I'll start my discussion with property, plant and equipment. He said it is also called as fixed asset, capital asset, non-current asset. These are all name of the same thing. They are expected to give benefit for more than 1 year. So their useful life is more than 1 year. It can be 5 years, 10 years, 20 years, 50 years. It depends upon it is a building, it's a vehicle, it's a furniture, it's a fixture. And these plants we put it for production, sometimes for other purposes. Now how we record it? Once we buy the first time, what is the meaning of initial measurement? Is the first time when we buy an asset, it is initially measured at cost, historical cost, the cost that on which we have bought, we have an invoice for it. That will be the first initial. And what it will include when we say cost of an asset, ideally cost of an asset is every expense that we do to make this asset into a workable condition. For example, I bought something from US, it has to be installed in UAE. First I will pay the logistics, insurance, then it will reach to the port, I will give the clearing charges, I will pay customs, then I will pay again the courier to bring it to my warehouse, right? So far story is not finished. Then some installations has to be done, then maybe installation, testing, everything, till it start giving me the benefit. All kind of expenses will be part of the cost of assets. That's why he said the initial purchase price, which is minus trade discounts, rebates plus purchase taxes and import duties, and directly attributable cost of bringing the asset to your location and condition needed for its intended operations, such as architecture costs, engineering fee, site preparation, delivery and handling, installation, assembly and testing. In most of the cases, when you are going to borrow money for buying this plant for the over of time, so borrowing costs to the acquisition, construction and production of property, plant and equipment, construction for internal use is included in its initial cost. So that will also be part of your asset. Okay. Then we have a subsequent measurement. What is subsequent measurement? For example, initially you buy it. Now I am buying from you. So it's not a new purchase. It's like a used asset. It cannot be on cost because maybe you bought it 10 years before in $10 million and today it is only $2 million. So I cannot record it at cost. I will do it on the carrying amount of the property, plant and equipment, which is of course cost less all the accumulated depreciation. That will be your carrying value. The amount is equal to the historical cost minus accumulated depreciation, or in case this asset has suffered huge changes of the market, so it must have an impairment losses, so you will deduct and the total amount will be your subsequent measurement. We have two types of expenditures, one is capital and one is revenue. What is a capital expenditure? Any expense that you do converts this expense into a useful life of more than 1 year. We don't say it an expense, we call it as asset. Revenue expenditures are those expenses which is for day-to-day nature. For example, we are paying rent, we are paying salaries, we are paying other stuff. That is the part of your revenue, day-to-day operational cost, right? Moving forward, we have a term called depreciation. Depreciation means decrease in the value of the asset. All asset has to be depreciated. Like for example, if you buy a new car, maybe it's a Lamborghini or it's any brand, you buy it and you put it in your bedroom and you put a cloth over it. After 1 year, if you will want to sell this car, 2015 model in 2016 will be less amount of 2000 in comparison with 2016 model. You didn't use it, you didn't do anything out of it, but asset decrease itself. So this is the phenomenon that all asset has to be decreased, leave the value, and this is called depreciation. Now, depreciation is the process of systematically and rationally allocated the depreciable base of a tangible capital asset over its expected useful life. So ideally, when an accountant is going to record an asset, he knows that the life of the asset. For example, when we buy a car, this car is 5 years. No car we can assume 20 years is going to work. So 5 years is a useful life. So then we will see what are the methods. Based on that method, he will get a value and we will start depreciating the asset over the period of time. So there is an abstract for you to understand. We have a purchase price plus we have installation. So when we add, this is our total cost. He says that after using maybe like for example certain years, 5 years for example, we can sell this car asset into 100,000, right? So net amount that is to be depreciated is 900,000. This is how it goes. Depreciation base is the cost that you are going to invest, and anything that at the time of disposal you will get, so the difference will be into the depreciation amounts. We have several methods to calculate the depreciation. The first method, that is straight line. It's a very simple method. We need a straight figure every year for depreciation. That's why it called straight line. Straight, hard, exactly the same value. So simply we take the depreciable base like